Hi, I'm Rob.
And I'm Rob.
And this is Ask Rob and Rob.
Hello everyone, welcome to Ask Rob and Rob, the show where you give us your lovely questions and we give you some, hopefully, lovely answers. And this week we have two more great questions in. And it's easy to do. If you want to get your voice on the pod or your name in the Sunday Times, where we also answer questions, you can go to the same link. It's propertyhub.net/ask. That's propertyhub.net/ask, where you can find the telephone number, a button to leave a message, or a link to the Sunday Times. Whatever you prefer, we do not mind. But this week, we've had two lovely audio questions in. The first one in is from Tim.
Hi, Rob and Rob. It's Tim here. I just want to say thanks for all the content that you've done over the years, a wealth of information. I'm interested to hear your thoughts on the fact that interest rates seem to be staying higher for longer over the next year or two. I have two investment properties, one I've owned since 2014 in Brighton and one I've had since 2019 in Worthing. Incidentally, you did a deal analysis on the Worthing property back then, and it was interesting to hear your thoughts on that. Right now, however, I have got the Brighton property has become vacant recently, and I was considering what I should do. The numbers I've run, if interest rates stay higher next year when both properties come up to the end of their 5-year fixes at the end of 2024, will mean that the properties are just about making a little bit, breaking even and making a little bit. And obviously, I would rather have an income that is more than that. I just wanted you to know your thoughts on whether you would potentially sell Brighton and reinvest that capital into Worthing to pay down the mortgage for the time being, and then maybe release that again when interest rates are better, or whether you might advise to selling it all up and waiting with that cash pot to see where things go. Anyway, I'd be really interested to hear your thoughts. Thanks very much.
Tim, really good question. Thank you. And as I'm sure you know, it's a tough question. We can't say, oh, yeah, you should do this. It's not one of those situations where there's an obvious right course of action, because you don't know what's going to happen in the future, and it's really hard to know which move is going to be rewarded. What I would add to your decision, though, Tim, is you're looking at this through the lens primarily of income, in your question at least. And that is important because, of course, you want to make sure that you're covering your costs at least if your mortgages do go up to the level you anticipate they might at the end of next year. So, of course, you should be thinking about income. But if you are going to be in property for many years longer, you said you've owned since 2014, so you're about 9 years in. If you've got another 9 or more years to go, then of course you want to be thinking about capital growth as well. So this doesn't necessarily help because you don't know what's going to happen in terms of growth either. But of course, if we did continue to see growth in the property market over the next 5 years, which you've got to assume that we will do, in line with inflation at least, even if prices continue to drop over the next year or two, then owning two properties is going to be better than one because you're experiencing capital growth on both of those properties. So you could have a situation where your cash flow takes a hit, but your potential growth is stronger. And that may be okay for you, or it may not. Completely depends on your situation and your goals. Another related angle to come at this from is about the relative growth potential of your properties and other investments you could make in the future. So I don't know a lot about your part of the world, but I imagine that over the last 9 years in Brighton, you've had a run of really good growth. And it may be that you come to the view that you've had that growth. You're not going to get a lot more. So you could be looking at things like local affordability, yields if you were to buy today, that sort of thing, to try to establish whether you think there's much more growth in the local market. Again, you'll never know for sure, but you could say, okay, I've had a really good run here. I think I've kind of got what I'm going to get out of this property. Therefore, I'll take those gains off the table, use the funds to pay down the mortgage, increase the cash flow over the short term, and then be looking for an opportunity to reinvest in a different area where there's more great growth potential for the next whatever period of time you've got. So Tim, that is absolutely not an answer, but it's a few more factors to consider. And ultimately, yeah, of course, you're going to want everything. You're going to want the most growth. You're going to want the most cash flow, but you're going to have to make a decision. You have to work out what's more important to you. And it's impossible to know without hindsight what the right decision is. So don't agonize about it too much. Just consider all the variables and come to a decision that seems right to you, that you can live with and that you're comfortable with. So Tim, thank you for your question. Hope that helps.
Alrighty, next up we have a question in from, What a fine, outstanding gentleman this is. Rob.
Hi, Rob and Rob. It's Rob. I've wanted to get into property investment for a while as a long-term investment, and I've got around 20k saved up from a mixture of inheritance and saving, but I'm at a bit of a block now because I'm not really able to save up anymore in the current climate. So what I wanted to know is what the best route to do that is, and if you think that's feasible and how. I'm not really in a position to be able to remortgage my own house, so it's a difficult one for being able to have it enough starting money to start out with.
Hi, Rob. I'm sure you didn't get picked because of your name, but you might have. No. Don't worry. Don't everyone start calling themselves Rob just to get on the show. This is a question that we can help with. And unfortunately, Rob, even with your wonderful name, it's not going to be an answer that you like, because there is no magic formula or wand for suddenly to get you to a deposit level that allows you to invest in property. That's the truth. Now, you can invest in a fund, and that will give you exposure to the property market. So that's something that you could consider. Or you could consider a joint venture. So you've got 20k, find someone else who's really keen to invest in property with 20k and invest together. But do not go into that lightly. That comes with a whole bunch of challenges. You have to make sure your goals are aligned. You should get contracts in agreement. You've got to be careful that even if you get all that in place, if this is someone you know well, if your life circumstances change and you want different things, even if the contract says no, you may then have some issues with that person. It's not to say joint ventures can't work. It's just, for someone who's not invested in property before, that would be a very big step to take. But that's another possibility. Or the third route is just to keep saving and investing. So whether that's in a fund, through a stocks and shares ISA, there are different things you can do. That, to be honest, the interest rates right now are great. So often in the past we would say invest, but if you can get 6% to the bank right now, if you can just save a tiny amount to add to that each year, on top of that 6%, that could start to make a difference. The market isn't going great guns at the moment. So while it's plateauing or softening slightly, then build your pot as much as you can. I'm not saying it's easy, but just keep persevering and hopefully you can get to a deposit amount which gets you off the mark. The great news is that yes, your first property is without doubt the hardest one to do. The hardest one, because you've got to build that pot up. Unless you're in a fortunate position where you're giving some money, then you have to build that first pot up. But then the second one will come a little easier because you continue to save, and then you've got the rental profits from the first one. And you start to build a snowball. And we've talked about the snowball effect many times on the podcast. So the first property you ever get will be the toughest, like without doubt. But I promise you, over the long term, it will get easier. And this is what it's all about. It's the long term. So I appreciate the keenness that you have today. It may leave you frustrated, but that is the way to go. A word of caution, because there are a lot of people in your situation, Rob, who've got 5, 10, 20k and are desperate to get going. And you will be seeing online, if you consume property content, people pitching you non-stop about how you can get into property for little or no money and spend money with them. And often it starts with next to no money, and then a course of $5,000 where they'll promise you the world, and all you need to do is go on that course. The majority of those courses, not all, but the majority, are borderline scams, where they are great at getting you excited and great at making you feel motivated while you're training, but leave out actually that what they teach is either impractical or an incredible amount of hard work, which just ends up being a second job. So do be aware, with that money in your pocket, you may be tempted to go that route because what they're offering might feel appealing, but that is not the route to go. So it's either a fund, joint venture, or keep saving and investing. Each have their own pros and cons, but the one I would stay away from is those property courses. Sorry, Rob, I know it's not probably the answer you want, but it's the answer that most people listening will need.
Well, there you go. 2 more questions answered. We will be doing it again next Tuesday, and we'll be doing it again in the Sunday Times. So send your questions our way for either of those at propertyhub.net/ask. Until we see you next on Thursday for the Property Podcast, have a great week. Bye-bye.
Bye-bye.